we have a very special guest joining us today. As you know, we bring you regular updates from the Colombo Stock Exchange, and today we have the key person heading CSE joining us, and he is Mr. Rajeeva Bandaranaike. He is the CEO of CSE. A very good evening to you and a very warm welcome. Yeah. So first of all, can you talk about the current situation of the Colombo stock market?
Yeah, if you look at the market this year, we have seen the market growing quite differently to what we have had in the last 2 years. As you know, we have had 2 bad years in the last 2 years where we had negative growth. But if you take 2017, the market has really turned around. And if you look at the share prices, we have seen the all share price index increasing by about 5% from January to date. And the S&P 20 index, which has appreciated by about 6.5%. So this year what we have seen is a turnaround of the market after 2 very dull years.
Okay. So there's so much talk about demutualization of CSE. So can you explain this process and the progress CSE has made so far?
Okay, demutualization, I need to get into the structure of the stock exchange per se to talk about demutualization, which is a bit of a strange word to many people.
Yes.
The stock exchange itself is a company limited by guarantee, which essentially means that it is also a not-for-profit organization. Now, it does not mean that we don't make money. It does not mean that we don't make profits. We do prepare a profit and loss account, we have a balance sheet, and we like to earn more money than what we spend. But essentially, it is a not-for-profit organization. So this process of demutualization means you are moving from a company limited by guarantee to a company limited by shares, like any other commercial organization. Now, why one would want to do that? Essentially, in the case of a stock exchange, is to separate ownership rights from trading rights. As you know, the stockbrokers have a claim on the stock exchange, and once it's a mutual organization like a club or association. But we have progressed beyond that in terms of structure and governance, etc. over the years. But essentially, it is a member-driven mutual organization. Now, demutualization means you are demutualizing that mutual organization and then getting into a more commercial structure. So you separate the rights of brokers of their trading rights to their governance rights. So we will have a completely independent board. For example, currently it's a representative of a broker who is the chairman of the stock exchange. But in a demutualized environment, it will be an independent non-executive director who will chair the exchange, for example. So like that, there are governance and structural changes that will come about. And essentially, it means that the exchange will then represent a wider stakeholder group than the brokers themselves.
Okay, and still we are a frontier market. So how can Colombo stock market get into emerging market equity indexes? What should we do to get into this index as we can attract fresh capital coming in?
Yeah, now emerging markets index, there are a number of criteria that one has to fulfill. One of the criteria is that we need to have a minimum number of very liquid companies that have a fairly significant public float, that is shares available for trading. So right now in our market, only 2 companies qualify as constituents of an emerging markets index. So we need to have more companies qualifying. So we need to have larger companies with a larger public float that will get listed on the CSE for us to qualify to get onto the emerging markets index. Now, why would one want to get onto this index? Because you, as a market being in there, will mean that there are more foreign funds, foreign investors who will invest in Sri Lanka in our market. So a lot of markets aspire to get into the emerging markets index, and one recent entrant was Pakistan, where they graduated from a frontier markets index to a emerging markets index. And right now in the MSCI Frontier Markets Index, so we have ourselves, Vietnam and Bangladesh and Kazakhstan, for example. So those are the markets that are in the index. So our aspiration is to reach out and get
How
into
far
investment.
do you think?
Well, a lot of work
are?
has to be done, and we're doing that. I
Okay.
think we need to set ourselves a 2 to 3 year time horizon for that. As
Okay.
I said, we need to get larger, more liquid companies in. That's a key criteria that we have
Okay,
fulfilled.
so when you compare with other frontier markets, forward price earning ratio and price to book value of the Colombo market is still quite low. So can you talk about the investment opportunities available in this situation?
Yeah, now if you look at the price earnings ratio, the market PE as we call
Yeah.
it, actually it's an opportunity.
Yes.
Because due to the fact that we had a downturn in the last 2 years, our market is relatively cheaper to other
trade.
markets in the region. So if you look at it from the perspective of a foreign investor, Colombo is cheaper than Thailand or Indonesia or Philippines or India or Singapore or Malaysia. So it's a buying opportunity for foreigners. So we see it as an opportunity that Colombo is relatively cheaper to other markets. So the PE is a measurement that you can measure valuations across markets. So our price earnings is currently is about 11 times. And just as a comparison, if you see India, it's at about 22 times. If you see Malaysia, it's at about 18 times. If you see a place like Vietnam, it's about 15 times. So as a regional comparison would mean that Colombo is cheaper, which makes it a good buying opportunity. Yeah.
Right. So market liquidity is one of the key factors taken into consideration by investors when making investment decisions. So what is CSC doing to improve market liquidity?
Yeah. Now the Securities and Exchange Commission came up with some regulations recently, which compels companies to maintain a minimum public float. So there's a requirement that companies need to maintain a minimum public float of 20%, and we are quite serious about enforcing it, and companies have started to comply with some of these regulations. So there are more shares available for trading. We are also constantly talking to companies and trying to encourage them to divest some more into the public float. Quite apart from that, a key requirement to improve the liquidity would mean that we need to encourage larger, more liquid companies to come into the market. That's one way that we can add liquidity to the market.
Okay, there was also discussion to implement short selling. Are you looking at materializing this anytime soon?
Yeah, now again I need to explain how do we get to short selling. We currently operate on what we call a non-delivery versus payment environment. But ideally we have to move to what we call a delivery versus payment. Delivery versus payment means you're essentially exchanging shares and money at the same time. But today, if you take Colombo, when you transact on the market as a buyer, you receive the shares instantly to your account as soon as you do the transaction. As a seller, you lose custody of your shares, but you get paid 3 days later. So there is a 3-day risk. So our plan is to move by next year into a delivery versus payment environment where shares and money will be exchanged at the same time. Now, once you do that, that creates certain opportunities in the market. For example, for investors to sell short on a stock, sell something that they don't have initially and then fulfill it, buy it back later. So that creates opportunity for investors to make money not only when the market is on the rise, but also to make money on the market on its way down. So that's one opportunity, and along with DVP we also have other products like stock borrowing and lending, which is another product that investors can expect, where if you have dormant portfolio with you, you can lend it and make some money out of it as well. So there are a few opportunities that will come by way of us moving into this delivery versus payment environment.
Okay, at the same time we see a limited number of, only a limited number of investors seen in the market active, because you have about over 750,000 in the CDF system, but you only see about 30,000 actively trading. So what is CSC doing about this situation?
I think again we need to understand the structure of the market. Our market essentially is what we call an institutionally driven market. So nearly 93% of volumes are generated by foreign investors, institutional investors and high net worth investors. The real retail investor that we are talking about constitutes or accounts for only about 7% of the market. So that's the structure of the market. Now, in order to attract a larger number of people, we need to do a lot of work in improving the level of knowledge and awareness among the investor community. Secondly is to provide them accessibility. How do they access the services of stockbrokers? So those are some of the key questions that we are resolving presently. As a stock exchange, we have set up, I think to answer your question, we have set up 8 regional offices in different parts of the country, almost in all the provinces, and they act as marketing officers to create awareness programs. We do about 500 to 600 awareness seminars for any given year in all 3 languages to educate investors on investing in the market. As you know, investing in the market is not as easy as investing, you're saving your money or putting your money into a bank. So you require to invest some time. You need to study the company that you're investing in. So you need to invest time, not only money. So, and that requires some form of learning. So that's why we do conduct a whole series of awareness and investor education programs to give that level of understanding to the investor, so that he can understand what investing in capital markets means, enable him to understand the risk, how do you manage the risk, how do you minimize the risk, and how you make a successful investment in the stock market. So that requires some level of awareness creation among investors and investor education, which is part and parcel of our role in encouraging more people to really come into the market.
Okay, you just mentioned that there are so many other options also available in the market for investment. So if you talk about the risk exposure, what is the level of risk that a person is exposed here compared to all other options available in the market?
Yeah, now if you compare investing in the stock market to other forms of investment, as I mentioned, if you, we also need to understand the difference between savings and investment. So essentially, you first start saving, and when you have a sufficient amount of money saved, is then when you get into investment. You first probably save in a bank and put by your money for a specific purpose that you want to. But once you build up sufficient reserves, that's the time you can channel your money into investment, and investment in capital markets and stock markets. So we need to first understand the difference between savings and investment. And once you do that, when you look at an opportunity in the market, when you want to get into stock markets or capital markets, you need to understand the risk in investing in capital markets. You need to understand that you can make capital gains as well as capital losses. So you need to understand that share prices fluctuate. You need to understand that investing in the stock market means that it's a long-term savings instrument or investment instrument, that your money that you put in is not really targeted at short-term gains. Okay. So in the short term, there is volatility in any stock market. You may lose in the short term, but in the longer term, yes, in the longer term, you will gain. So if you compare investing in the market as against other forms, it carries a higher level of risk, but also it carries very much higher returns over the long term. So you need to commit your money long term in the first instance. And secondly, I think you need to understand the risk of investing in markets. And thirdly, as I said, you need to invest some time in learning about the companies that you invest in, learning how to interpret a financial statement. So those are some of the requirements when you are looking at investing in capital markets. So that's why this concept of risk, understanding risk, is important, and that's what we talk about in all our awareness seminars. Right. How do you manage risk?
Okay, my final question to you is, I'm expecting a very brief answer. Can you give some tips for a person who would aspire to get into share trading?
I think essentially, as I said, you need to understand. Secondly, that you need to use different strategies investing in stock markets. You don't put all your eggs into one basket, the famous saying. if you have money saved up for a rainy day, you don't put that into stock markets. But if you have sufficient reserves and investment, you need to get into markets if you want higher returns. And currently the market offers a very good buying opportunity because prices are at relatively cheap levels. So it's what we call a good buying opportunity. But when you get into the market, I think you need to get into fundamentally strong stock. You need to study and understand the risk. You need to seek advice, proper investment advice prior to getting into the market. So these are some of the things that you need to consider.
Right. Thank you very much for joining us today. It was quite an intense conversation we had with you and an informative conversation we had with you. Thank you.